So Dan, let's just start here. The yield pressure, 20-year hitting over 5%, but I think the real thing that we're looking at right now is the 10-year at about 4.75%, putting a lot of pressure on tech on top of a rising dollar. How do tech stocks move higher with this setup?
Yeah, I think there's two things playing out. I mean, one, fundamentally, in terms of AI, CapEx, use cases, what we're seeing strong on the enterprise was on the consumer side, that's actually better than expected. And I think we'll see that over the next month in terms of earnings. Now, clearly, look, we've gone through this the last few years. In terms of the 10-year bond risk off, we're going to have these moments. But our view is these are the opportunities to own the winners. And as the fundamental cases play through, look, Frank, I only think we're halfway through this tech bull market.
Dan Ives remains optimistic about tech stocks despite pressures from rising bond yields and a stronger dollar. He views the current environment as an opportunity to invest in leading companies, highlighting the ongoing AI-driven capital expenditure boom as a key growth driver. Ives believes the tech bull market is only halfway through. He emphasizes Palantir's potential, comparing it to transformative companies like Oracle and Salesforce, despite valuation concerns. Ives sees its role in the AI revolution as a catalyst for long-term growth, alongside top names like Microsoft and Nvidia, which he views as core beneficiaries of AI demand. Ives also stresses that market sentiment is crucial. While challenges like interest rates and geopolitical issues create headwinds, he believes tech strength, driven by AI innovation, will continue to propel market growth, with current pullbacks offering buying opportunities.
All right, we're only halfway through. I do want to talk to you about Palantir. That's one of your top 10 picks. Under pressure once again. We've seen, after it was the best performing stock in the S&P last year, we continue to see a sell-off and the stock be under pressure. Are you concerned about the valuation like so many other people say they are? They just believe the valuation's too high and it would be very difficult for the company to live up to the lofty valuation.
Yeah, I think if you just stick with valuation, you've missed every transformational tech name in the last 20 years. I think Palantir, I continue to view as that's the next Oracle, the next Salesforce. When I look at AI revolution, and let's talk about numbers, $2 trillion of AI CapEx next 3 years. And I think where Karp and Palantir position, as it plays out, we're going to have these sort of white knuckle periods. But ultimately, I think this could be a 3-digit stock as it plays out. But these are the times that you ultimately look at the winners and how to own them.
All right. So you and I have talked about this before, the rise in the dollar. I'm looking at a 1-week chart of the dollar. It's up about 1.5%. These are tremendous moves when it comes to a currency. We did get a spike after the jobs report, but still, it was still moving higher last week overall. I know you're bullish on tech. You're always bullish, just to be fair. You gave us your top 10. Out of these top 10, which do you see as being the most likely to be impacted by this rise in the dollar due to their revenues coming from overseas?
Sure, Microsoft, Oracle, probably 1 and 2 in terms of ones that are exposed. I mean, Apple clearly will also have some headwind. Now, look, I think the street is already factoring in some of that in terms of estimates. I don't think this becomes that dramatic if, ultimately, if we actually start to see this curtail. But it just comes down to, Frank, I think we sit here a month from now, it's a much different picture because of the fundamental picture right now that plays out in tech, as this actually is seeing strength being led by the AI revolution.
Okay. But we have seen a lot of weakness in tech, Dan. Let's just be fair. We were just showing a chart from Mike Santoli's column over the weekend showing the current bull market and the average bull market. If you look at the average bull market, this bull market has a lot more to go, but it seems like tech, it doesn't seem like it, just due to the concentration, tech has to be the engine moving it forward. So if we go to the next Fed meeting coming up later this month and the Fed continues to be hawkish, do you see that continuing to impact the tech trade? Because that seems to be the inflection point, even for the tech trade, even though we call these stocks defensive just because of their bulletproof cash holdings and everything else.
Yeah, look, and that's also why you have a diversified view in terms of whether it's an Oracle, whether it's Microsoft, and some of the more high growth names like a Palantir, a Tesla, and others. Look, it's going to be a headwind, but our playbook the last few years has been you use these opportunities to own the winners. And that's why I get the bears are going to come out. Right now, the bond market, the 10-year is going to ultimately dominate. But we're only halfway through tech bull market. And that's why I still believe tech stocks are up 25% this year. We look back at this as an opportunity, not time to hit the elevator and ultimately hit the exit.
So it's not just about fundamentals, it's also about sentiment. Sentiment's a big driver in the market. Which one of these earnings reports do you think we need to watch to look at sentiment? Which one's going to tell us really where the tech trade is as far as the investor sense of their confidence in the bull market going forward, their confidence in this AI trade?
Yeah, I think Microsoft, because I think as long with Nvidia, those are probably the best in terms of barometers for what we're seeing with AI, and ultimately that's a stock that's also been under pressure. And then ultimately you look at Apple, because Apple right now, whether it's Zuck, whether it's some of the downgrades, a lot of pressure in terms of showing what we're going to see, specifically coming out of China in terms of demand.
You mentioned Zuck. We do have a soundbite we want to play from Zuck on the Joe Rogan podcast, talking about Apple. We're going to play it. I want to get your take.
Great.
Just because they've been so off their game in terms of not really releasing many innovative things, that eventually, I mean, the good news about the tech industry is it's just super dynamic and things are constantly getting invented. And I think companies, if you just don't do a good job for like 10 years, eventually you're just going to get beat by someone.
All right, your take, a kind of aggressive take from Mark Zuckerberg. Ever since he started those MMA classes, it seems like he's just a different guy. He's got a chain on, it's a different thing. But in all seriousness, do you think he actually has a point about Apple and their innovation?
Look, it's an MMA battle with Cook and Apple. And because it comes down to 30% in terms of, with the commission, what they're taking. And we're seeing this sort of Game of Thrones play out between Meta, Apple, and I think across the rest of tech because of where we're going into it. It's frustration from Meta's perspective. But look, for Apple, as we've talked about, this is the year they have to ultimately not just innovate, but show the consumer AI revolution does go through Apple, and I think Zuckerberg recognized that.
A week ago, the stock was hitting all-time highs at $153 a share. So we pulled back about 13% from those levels, and that's on top of the 170% gains that we saw in 2024. Now, some of the weakness today attributed to those new controls that the Biden administration's putting into place as far as AI and high-tech chips in the sale, especially to China at this point. So that's putting some additional pressure on this stock today after a nearly 6% drop that we saw last week. And also maybe negatively affecting the stock today. HSBC came out, lowered their price target to 185 from 195, and they're saying that the supply chain ramp up overhang in the first half of 2026 implies limited room for a beat and raise for upside for Nvidia. So maybe that's pressuring the stock also. But, if you listen to CEO Jensen Huang during his CES keynote just a week ago, he was pretty hyped up, and demand still outstrips supply for the Blackwell chip that they've already started to ship at this point. But they've had some supply chain issues, so that might be a concern moving into their earnings. And their earnings aren't until mid next month in February, so keep that in mind. But we did see some bearish activity. A lot of call activity in here today, so there's some bulls buying some calls on this drop. But the one that stuck out to me was out in the February monthly cycle, the 130 strike puts. Trader bought 10,000 of those, paid an average debit of about $6.80. So that break even of 123.20 over the next 39 days. It's about 7% below the current share price in Nvidia. So while we always and typically see a lot of call activity in Nvidia on a daily basis, whether the stock's up or down, this one kind of stuck out to me because you're going to capture that earnings event here, and we've seen continued pressure in Nvidia since those all-time highs just a week ago.
Yeah. And look, bulls make money, bears make money, right? And then the pigs are too greedy. But really, I mean, that's the bearish side of things. And we've seen this coming off of the highs, to your point, in correction territory, down more than 10%. You actually said 13%. And how about Palantir? Much of the same. That's come down from almost $85 to $63 in a very short period of time. Interested to see the trade that you found there.
Yeah, that comes on the back of those 340% gains that we saw in 2024. So, yeah, maybe some profit taking in Palantir. But if you look at their last couple of quarterly results, they were actually pretty decent as far as a growth stock goes. But at the same time, valuation's really getting stretched in this name. It's still stretched with the stock trading off about 14% so far this year, on top of the 4% drop that we're seeing today. And if you look at some of the catalysts for this stock, it's the commercial side of their business that's really picked up. They used to be reliant on their contracts with the Department of Defense and governments but now they've started to expand that where the commercial side of their business is about 50% of their revenue. Now, over the past couple of weeks, we've seen some negative analyst commentary on this stock, though. Morgan Stanley initiated coverage recently of the stock with an underweight rating. Deutsche Bank came out with a note. They put a sell rating on it, $35 price target, which is about half of what it's currently trading at this point.
Dan Ives remains optimistic about the tech sector despite challenges like rising bond yields and a stronger dollar. He points to the ongoing AI revolution, which he believes will continue to drive growth, with companies like Palantir and Microsoft poised for long-term success. Ives sees the current market as an opportunity to invest in top tech stocks, emphasizing that the sector is still in the early stages of its bull market. He also discusses the impact of the stronger dollar on global revenue-dependent companies like Microsoft and Oracle, though he believes the market has already priced in these effects. Ives maintains that the fundamental strength of tech, particularly driven by AI, will ensure continued growth for key players in the sector. How do you think AI will impact the performance of tech stocks in 2025? Is Palantir's high valuation a concern, or do you see it as a long-term growth opportunity?